The rules of the mortgage game have just changed, and it's happened quickly. The FCA, Financial Conduct Authority, is encouraging lenders to hand out bigger loans to more people, even if that means relaxing a stress test that were designed in post-2008 to prevent a crash. So is this the boom opportunity the first-time buyers have been waiting for, or are we heading back down a dangerous track of risky lending and runaway house prices and a potential crash? Basically, the FCA has said that mortgage lenders, and I think the quote is, may be unduly restricting access to otherwise affordable mortgages. So the FCA has said in this last month they want to loosen the stress tests that people have to go through to get a mortgage. Basically what happens is when a lender decides to assess you for a mortgage, they look at if interest rates rise by up to 4%, will you still be able to afford this mortgage? That's called the stress test. The FCA is saying that's too strict and we need to be a bit better on that so that more people can get the mortgages. And basically what it means is that people, say first-time buyers, if we get an example, who earn £50,000 between them and want to buy a £260,000 property, assuming they take out a 2 or 3 year fixed rate mortgage, may now be able to borrow £210,000 up from £196,000, so an extra £24,000. So they can buy a bigger property, or more people can get into the market, which is what we need more people to afford property. A second stepper, a couple with 2 children, perhaps who earn a total of £63,000, 64,000, and want to buy a £425,000 property, you'll now be able to borrow up to £305,000 via a Santander 5-year fixed deal rather than £284 as it was previously.
Sorry to interrupt, but if you're enjoying this piece of content and would like to find out more about buying property and our key 10 steps to doing so, then pop your details in the link below somewhere and grab a copy of our book, 10 Steps to 10K, the Expat Property Playbook. Enjoy.
Rachel Gedders, the director of the Mortgage Broker Mortgage Advice Bureau, said, "We're hopeful that more lenders will follow suit. We're excited to see what lenders are going to be doing over the coming months." On the backdrop against that, with house prices 3.9% up over the last year, it's really household costs and bills that are holding things back. So we'll cover that in a moment. So let's look at mortgage rates, where they're heading. Barclays has become the largest UK lender so far to cut its mortgage rates below 4%, sparked by the apparent turmoil that's going on with the Trump tariffs. It's the first of the big 6 to do that. They said they were reducing new rates by as much as 0.38%, with the changes taking effect as of yesterday, Friday. 2 and 5 year rates are currently at 4.11 and 4.12, and those with the large deposit can actually now get 3.99. Fixed deals below 4% have been available around about recently, but now they're becoming more prevalent. The Coventry's just introduced one on Wednesday. David Sterling, director of Mint Mortgages and Protection, said it remains to be seen whether Barclays are simply dipping their toes in, but the general feeling is that major lenders will follow suit soon. So that's positive. Peter Muggleston, a mortgage advisor with the Online Mortgage Advisor, said the move could trigger basically a price war. And he says it wouldn't be a shock to see lenders that have been held back because of the stability issues around the tariffs now jumping in and doing it. Expectations of Bank of England rate cut being very soon have dropped back after the latest trade tariff dramas. So would it lead to a boom or a bust? What's the answer? The answer really is it'll put more money in the market, as with a cutting of rates, but the problem is house prices are continuing to rise and cost of living is rising. The cost of household bills went up at the start of April on top of the continued rent rises in utilities such as domestic energy and water. Also council tax, I don't know if you've noticed that. I noticed my council taxes in the UK have gone up significantly. I mean, over the last 5 years they've virtually doubled, and bearing in mind I don't live in the UK, that's quite a bit of pill to swallow. Phone and broadband contracts are all being renewed, TV licenses. So that's number one, is those bills are all going up. So you might have more money in the market, which will push the property market potentially up, but you've got other people having trouble with their affordability. In addition, you've got the Donald Trump effect, unknown territory really. Who knows what's going to happen with this? Modern economics is not used to dealing with Donald Trump. And I think I've said previously, and I think we'll find it is true, he's just a negotiator trying to get a better deal for the US, and good luck to him. You know, he could have done it a better way, I think, but good luck to him. Around the world, so you hear about China, huge hikes, and other locations. It's going to be bad, all that stuff going on. But in the UK, 10% is a lot less than we expected, and retaliation, I think, is unlikely, especially with Keir Starmer trying to negotiate this secret deal, secret US-UK trade deal. So I think prices on that would be fairly negligible. So really it's the bills going up. Performance of the UK economy, that is the real issue. What's inflation doing? The UK economy, will it dip back into negative territory? It's already been downgraded last month to potentially 1% GDP growth last year. And there's heaps of issues there. I mean, really, if you think about it, getting people to go back to work, they don't seem to want to. And you can understand why. It's a pretty negative environment. You've got all these people, immigrants coming in, who are keen to work and do any sort of job. And that's going to take away from a lot of the old jobs that were there. And so a lot of people are just going to think, I'll just sit in bed. I won't worry about it. I'll claim on the dole. You get a perfectly good deal on that. So why wouldn't you? So it's a big issue to try and get people back to work. So the fact that we're going to be potentially getting to 1% GDP growth will put pressure on the Bank of England to cut interest rates, to get people to put more money out into the marketplace, which could make house prices go up again, which will make them more unaffordable, which will mean buying to let will actually still be a better thing, which is very poor for the general person in the street. But as a buy-to-let investor, it's not. So it's difficult to know what's going to go on. Will relaxing of the FCA stress test guidelines lead to more mortgages? Yes. Can people afford bigger mortgages? No. Is the economy going to help bail them out? I'd say probably not. So really, all we're going to see is probably more of what we've been seeing, a general upward movement in the property market. It's gone up by 3.9% over the last year. I would have said that would be a similar sort of thing for it to happen over the next year. It's still a good buying opportunity. We've put 3 properties out last week on top of the 3 we did previously that are completed, and they've rented out immediately, and one's just been looked at today. So this is the house selling season starting. Post Easter, you normally see people selling a lot of houses, and we're getting into that period. And I think the idea that, interest rates might come down, job security isn't that bad if you're a long-term employee. They're still different for first-time buyers, very difficult indeed. So that's our view. My view is, from APW Towers, steady as she goes, just carry on as we are. I don't think we'll see that much of a change in the market. Going on to some comments on the channel last week. One was someone claimed that I'd obviously had too many pints of ESB before I started doing it. Now I am partial to a pint of ESB, and thank you very, very much for noticing that. ESB is good. I like a pint of London Pride as well. Have normally in the same establishments, but I don't know his place in Weybridge. So send me an invite, I'll come on down. Man 5033 says, I'm not selling up, but I'm not buying any more. There's no more stamp duty off me. You've had enough. Section 21, that's enough for me. Yeah, I understand that. It is stamp duty has got higher and higher. And it's a tax that actually stops people from moving. So if you can get a job in Manchester and you're living in London, and you've got to go and buy a house up there because you're going to move up there with your family, and you find out you've got to pay a £20,000 stamp duty bill, are you going to do that? So it's not a very good tax. It's the wrong way around tax. This is 1971. Miss McCarthy says, EPCC today, all rules changing. Might not make the grade when the new rules kick in. I've sold my 300 plus rentals to a foreign investor. Couldn't be happier. Well, congratulations on building that up over the years. Well done for selling it. EPC, yes, you're right. If you've got older properties, like stuff from the 70s, 80s, they're not going to be EPCC, and that's going to take money. The average house price, I think, in someone like Rochdale is about £110,000. The cost of the EPC will be 10 grand. So that's 10% of it, which is a huge amount. So EPC is not a great idea. But anyway, congratulations, 1971 McCarthy, on selling your properties. And Blair Archer, of course they will. The new legislation would not have been needed if landlords had not been consistently abusing tenants. Yeah, some do. I met one guy in Hong Kong who was a slum landlord, and he was like, I just don't care. I'll do what I wish. I won't fix this. I won't fix that. They can move out if they want. That's not a very morally correct or business-wise good idea. I don't do that with my tenants. I send them stuff on their birthdays, wedding anniversaries, those sort of things, little presents, gifts. To stay an extra 3 months, it's worth every one of them. So happy days. So I don't think everyone has been a bad landlord. But there we go. That's market wrap number 253 for this week. Hope you enjoyed it. What's the message? FCA is cutting the stress testing. It'll make it easier to get mortgages for UK-based people and therefore offshore people as well. Interest rates are coming down in some of the packages. That's positive. But cost of living is going up still, which will be a negative approach. Buy-to-let is still booming. Jump in. Cheers. All the best. Cheerio.